If you're stacking gold or silver or thinking about it, you need to pay attention to what's happening right now. This is the Daily Stack Report. Make sure to subscribe for daily, no hype precious metals updates so you don't miss out on what the market is really telling you. Today's precious metals market is active again. Gold and silver are both reacting to a mix of volatility, macro uncertainty, and positioning after recent strong moves. This isn't a quiet market, and when the metals stop being quiet, it usually means something. Now, guys, I want to go into this silver price action that we're seeing right now. I drew out a couple lines today because I wanted to show you kind of where my mind is at and what I'm thinking. First off, let's hit the basics. We have this gap that we're missing right here at the $72.29 mark that I drew out. And so it's got to go down there at some point. We're going to break this. We're going to break this pennant right here, and we're going to have to hit this before we can continue going up. I wanted to draw out this bottom resistance line. This has been a strong bounce point for us over the past month. Every time we've hit it, we blew past it right here to break this initial bull pennant right here, and then we bounced off of it and we went up to $82, came back down, bounced off again, hit $77 right there, came all the way back down, hit it 1, 2, 3, and look, we went past it one time and we went right back up, and then came down, hit it again, and continued going up from there. So guys, I do believe 70.31 is going to be our new low for at least the time being. Again, we got to come back and hit and break this pennant right here at some point and hit this $72 gap that we have right here, that we had on the 3rd, the 4th, going in right there. We never filled this. And guys, one of my main keys when it comes to reading these types of charts is that all gaps need to get filled on the downside and upside. I've been consistent saying that every video, and so make sure you look out for that. If you do see us break this pennant right here, just don't worry, we're probably headed down to 72 to fill that gap right there. But this is kind of where I see us on that track to break that $82.67 high. If everything goes right, it should be around 122 to January 22nd to January 23rd. That's when I would expect to break it. Now, as far as an uptrend, hitting that $90 mark, if we do continue on this line, wouldn't be till early February. And we would need to consolidate again down this path. We would like to break past this and then have our next low where the $70.31 is, how we have this nice resistance line. I would like to see it test that $82.67, that $83 mark at least 2 or 3 times before we can really shoot up to that 100. Because again, if we shoot up past this $82.67 high on January 22nd, 23rd, 24th, 26th, something right around there, guys, and if we go parabolic and we go all the way up to 100, we're going to see another big drop like we did right here. We went from 82 all the way down to $70 and eventually touching 69.22. So if we do that, we're going to come back down to the 80s, and that could create a great fall right there. So we want to make sure that we stay consistent along these lines right here. And so this is the basic chart that I have for you guys right now to kind of view and look at and stay in tune with. Now let's go over to gold. Gold, I don't really have a chart drawn out for that. I think silver is the big play right now. Gold continues to attract attention as investors look for stability in an environment where confidence shifts quickly. Even on days where price pauses or pulls back, gold is still behaving like a long-term hedge, not a speculative trade, kind of like silver is right now. What's important here is that gold is holding elevated levels after a major run, which tells us demand hasn't disappeared. It's consolidating, not collapsing. So everyone, hold your britches when it comes to gold. We're on the right track right there. Now, going back to my favorite, which is going to be silver. Silver is where things get interesting. Silver remains the more volatile metal, and we're seeing that play out again. Price swings are sharper, move faster, and reactions to news are amplified. Silver sits at the crossroads of investment demand and industrial use, which is why it tends to overreact in both directions. For stackers, volatility isn't a warning, it's a reminder to stay disciplined. And that's it, guys. Make sure you're staying disciplined whenever we're seeing this volatility. Remember the gap. So if we do break this pennant right here, which we should at some point, maybe end of the week, maybe early next week, I could see us kind of maybe hitting, I would say, around 77 again. I wouldn't be surprised if we hit that $77 mark, 78, and then we came back down, because it does look like this is going to be a hard resistance to pass. And so everyone just kind of stay tight when it comes to that. But across the metal space, what we're seeing right now is a market trying to reprice risk, geopolitical uncertainty, economic expectations, and positioning from traders all collide here. That's why these daily moves matter. They show where money is flowing before headlines catch up. So guys, here's my takeaways for today. Don't chase spikes. Don't panic on pullbacks. Focus on consistency, premiums, and long-term ownership. Markets move fast. Stacks are built slowly, and that's the advantage. So make sure you guys are stacking nice and slow and consistent. But if you do want more daily insight without the hype, without the noise, just straight facts, that's all I'm speaking are facts, what I see going into the history of the silver market and just markets in general, subscribe to the Daily Stack Report. I break down gold, silver, and precious metals every day so you can stack with confidence. Thank you guys, and have a great day.